Yes, sir. We are live. This is Travis from Carter Cal Capital Trade with Travis and Expert About the Reviews on YouTube. Hope everybody's doing very well today. This is episode 299 of Trade with Travis, the day after the FOMC. Being able to go through a recap of what ended up happening with that. Being able to talk about possible trades that we end up taking, or trades that we end up taking, trades that we did not take, and also being able to talk about what could happen today and moving forward towards the end of the week. So let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. But we damn sure will try to, like always. So with that being said, let me go ahead and get this off the screen. Let's go ahead and show what's going on with the economic calendar, see what's happening with that. And hopefully everybody's doing very well. I'm going to show myself onto the screen in one quick second. Just want to make sure everything is good when it comes down to the economic news. And we end up going from there. But how's everybody doing? Hope everybody's doing very well. Hopefully everybody ended up having a good trading day. Hopefully you didn't blow your accounts trying to sit up there and chase after what ended up happening yesterday. And ultimately, when it comes down to being able to trade and find positions and everything else like that, hopefully we can be able to find some today that will be worth our while. With that being said, I'm going to show myself onto the screen. Hopefully everybody's doing very well. Just got done with a workout, so please just obviously just manage with me as we go from there. But what happened yesterday? We ended up having interest rate decisions. The interest rate decisions stayed the same for the first time in the last four times that we've seen interest rate decisions. And from the talks and everything else like that, they wanted to keep it right around 5.25. There's an expectation that the current rate projection is going to end up being 5.6, but hopefully in the next couple of years that it's going to end up winding down from 4.6 to 3.4 and then ultimately back to 2.6. So what has been happening is that people have been basically been they've been trying to get their money back, and at this particular point, once they end up getting their money back, now they can be able to do more stuff with it. Everybody, give me one quick second. Got my son right beside me. Got to need. I have to answer. Okay, so let's talk about what else ended up happening. New Zealand dollar ended up having a GDP. The GDP was actually negative than what it thought it was going to end up being. Consensus thought it was 2.6. It ended up being 2.2. We ended up taking a look at what ended up happening a little bit earlier today, as today is another. Today is definitely another economic day when you take a look at the charts. The Australian dollar ended up having that unemployment change actually ended up being pretty good, and the unemployment rate's at 3.6%. So we end up looking at China, end up having retail sales. The retail sales were slightly negative at 12.7. In about 9 minutes, we're going to end up having a monetary policy statement from the Eurozone. And in about 22 minutes, what we're going to end up having is retail sales from the United States dollar as we go through. And remember, that will be taking a look at what ended up happening in May. Typically in May, you're not going to have a lot of sales or a great big push when it comes down to retail. So I think this number is probably going to end up being maybe at the same amount or slightly negative. I don't think it's going to end up being a big push up. All right. So with that being said, let's go ahead and take a look at what's happening with the big three. And also at this point, if you have any charts that you would like to be able to take a look at, any type of ideas that y'all like to be able to take a look at, please make sure that you end up placing those inside of the chat box. I definitely end up taking a look. Put this on mute. Do that right there. Do that right there. Okay. So with that being said, we'll start off with Bitcoin because Bitcoin's the first thing that I end up seeing off the screen. Remember, I ended up saying that I felt like Bitcoin was going to end up falling yesterday, and if you look at the drawing that we end up having yesterday, I truly do. I truly do believe that this market was going to end up making a push to the downside. Now, there was two different spots that I thought that the market was going to move down to. The first spot was right around 25,000. Currently, the market right now, as we speak, is at 25,000. I felt like we had a little bit we had a consolidation break. Remember, the last time that we ended up having 25,000 be a resistance number was way back in early April 2022 when the market ended up making that first fall, and then after that start to push right back up early in February of 2023, in which it wasn't able to continue with that movement before it ultimately ended up breaking obviously a couple months ago to be able to get up to 30,000. So the question is, there's two different positions where this market could fall. If this market holds that support at 25,000, then I think it's going to end up starting to gradually push up to 30,000. But if the market does fall and break this support, it will end up moving towards the next support. The next support to me is the halfway point of this overall consolidation that we end up having for a while. I'm going to move this box over because that was the consolidation overall. I'm going to move this and change it to orange so everybody can see that that was the previous consolidation. Now, with that being said, if it does move back to this halfway point, we got 25,000 right here, and then after that, it can fall all the way down to 21.5. 21.5 is basically the halfway point, so you could basically say 22,000. And if it does fall down to support from there, then it could go all the way back to 18,000. If barring bad news, that could happen. I don't think that will. I just think that now we end up having our low, we end up having our resistance. Now we're trying to figure out what's going to be the long-term movement of this overall position from a Fibonacci perspective. But with that being said, let's go ahead and place in a fib and let's see what's the move off of this one. So there we go. That's our current fibs as we take a look at it. What ended up happening, and this explains a lot now if you take a look at it, you understand Fibonacci's. If you don't understand Fibonacci's, please make sure that you end up paying attention to some of the videos that we end up having, whether it's on TradingView or YouTube, where we end up talking about how to be able to use Fibonacci's correctly. But essentially what ended up happening was that this is the fourth phase of a Fibonacci move. Pushed up to the A, rejected all the way down to the 23.6, and then pushed right back up. It did not go all the way down to the 382. 382 is considered to be a healthy retracement. And because there wasn't a healthy retracement, once it got up to the 127, which is right around 30,000, it started to reject. That's based off of the 80-20 rule. The 80-20 rule basically means that there's an 80% chance that if the market only retraces to the 23.6 on a retracement, that it will end up finding resistance at the 127 position. From there, market ended up falling down. From there, the market has fell down. It has hit the 20. It has went down to the 382 at this particular point. And if it starts to turn around at this point, then we should see that the market will be healthy and continue to move on. But there's no catalyst to allow it to be able to move at this particular point and feel pretty much comfortable. So now we get towards the sweet spot. The sweet spot is the 618, 786, and 86. The 618 is at 23,116. The 786 is at 21.5, and the 86 is at 20,883. That kind of aligns with what we end up talking about for us being able to catch this at a halfway point and being able to get in based off this move. So I'm gonna look at if the market ends up falling down from somewhere in between this overall area. If it does continue to fall from that support at 20,000. At 25,000, I do like being able to catch it right in that sweet spot. That is basically a R1 position if it does fall all the way down in there. And I'll definitely be happy to see that falls down into that position to be able to jump in and being able to make a move off of that. So currently right now, there's no move to be able to make. FOMC actually end up making the United States dollar stronger for today, which means that it's going to end up making Bitcoin a little bit weaker at this particular point. And we'll see how the market kind of reacts and moves from that position. So there we go. United States dollar is showing a little bit of strength when it comes down to Bitcoin, which means that if we take a look at the United States dollar index, you should see that pop up when it came down to movement. Okay. Okay. Thank you. All right. Taking a look at United States dollar index. We go based off of a weekly chart. We can see that the weekly is still considered to be bullish. The market is still above this magenta line right here, moving towards the upside. I'm going to start deleting some of this stuff that we're looking at to be able to make it a little bit easier to be able to view. But this market is still considered to be bullish, even though it ended up having a double top right at 12,990. From there, you can see that the market is kind of held at this position and held strong. If it breaks below this magenta line, then I think that it's going to move toward the outer line, which is that purple line toward the downside, which will truly make the United States dollar weak from a weekly standpoint. Taking a look at it from a daily perspective, we can see that the market is still in consolidation. They end up doing the same thing that Bitcoin ended up doing. Went to a resistance or fell inside of consolidation at 12,990. rejected from that resistance, went to the top of the support, broke the support at 12,870. And if it keeps on moving down, remember, if it breaks the support, it's going to fall to another support. You should expect that this market could fall all the way down to 12,740 before being able to ultimately make a move. So essentially what I'm saying is this: what I think is that the move is going to end up, if it doesn't pick up today, then I think it will continue to fall all the way down to 12,740, which was the previous support. And then after that, being able to make a move. So for people like being able to place in pending orders, that'll be a good position to be able to take a look at overall when it comes down to that spot. But United States dollar index is still on the bearish side, being able to take a look at it from downside moves. So if you're looking at being able to trade, I would look at being able to short on the United States dollar against pretty much every pair right now that doesn't have that has a lot of momentum. So Eurozone, pound, yen, through those pairs, I will look at being able to go against the United States dollar when it comes down to that movement. But currently right now, we can see that the market is bearish. It remains to be bearish, but it's in the middle of a consolidation spot. So for me, that's not a great spot to be able to get in. It's only a 33% area to be able to jump in and kind of take a trade. All right, so we're just going to stay away from that. U.S. oil. Taking a look at oil, haven't traded oil. Literally, I think I only traded oil once this year, and typically oil's been a good pair to be able to get into, but it's been on a long-term consolidation between 82.50 as the resistance and 62.70 as the support. Currently, right now, the market is at 68.60. It fell all the way down to 62.50, and then after that, had that big push up to the upside. As people end up knowing that that was a primary support. So we'll see if the market falls down again. If it does fall down again, I'm going to have a pending order ready for it towards the downside, looking at it to be able to buy. I do not expect that oil is going to end up falling down ultimately, but if it does, next take profit position will end up being right around 57.40 if the market does fall. From a push perspective, this market has just been stagnant. And because it has been stagnant, then there hasn't been a lot of trading opportunities unless you trade in a consolidation manner, meaning that you're trading a grid-like type function. You're probably still making profit off of this move just based off of the consolidation. Okay, so there we go with that. So just to kind of be able to talk real quick, United States dollar index is in consolidation and hit a support or hit a previous support. It's at the top of that support, turning past resistance into a future support. We're looking at that as one move. We take a look at what's happening with Bitcoin. Bitcoin is still falling. It's at 25,000 right now. 25,000 is a good round number, but I just don't think that people are going to end up making that move and jumping in at this particular point. It could fall all the way down to 21 and feel pretty fall all the way down to 21.5, which will end up being the 786 retracement or 78% of a retracement from that movement. That could be a position to be able to jump into. Currently, right now, it's really nothing to be able to do. Gold. We did not talk about gold. Let's go ahead and talk about gold real quick. Gold was in consolidation, or has been in consolidation for a while, but there has been a little bit more spread out, so there's been better moves. Resistance has been at 2070. It ended up hitting 2070 a little bit earlier in March, and since then has rejected. Fell inside a consolidation that we end up looking at right here inside this area, which is in blue. If you notice, it has pushed down to the downside off of this one. So there goes your breakout. Now, typically, when there's a breakout, typically what you end up seeing is a retest. So we have our breakout. We had one retest that ended up happening right here. Pushed all the way back up to 1940 and then rejected. Currently, the market's at 1929. The market's in a 2-hour buy zone. That does not mean to me that I'm going to look at selling right now at this particular point. But I am going to be interested in being able to do this. Anytime that there's a breakout, remember, simple rule, anytime that there's a breakout, typically there'll be a retest. So if we're looking at this from a movement perspective, I expect this. Market fell down. Here we go, breakout. It will retest 1940 again at some point in time. Once that ends up happening, if it rejects one more time, then I'd be interested in being able to make the sell as it rejects off to the downside. If you notice, once you end up having that movement, now it turns into a actual trend, and because it is an actual trend, then you end up having a hold on, let me do this right. Let's see, freehand writing. Oh, I'm hitting the wrong button. That makes sense. There we go. Then after that, you end up making a B, C, D movement. So that's what I'm looking for at this particular point. Not looking at being able to chase it right now, especially because the stock is in a 2 hour buy zone. Once it ends up getting into the sell zone, then after that, I'll look at being able to make a trade off of this one. I don't think that it's going to end up happening today. And the only reason why I don't think it's going to happen today is because that if we're in the 2 hour buy zone at this particular point, that means that you got at least 8 candles. 8 candles times 2 is 16 hours. 16, it'd be 16 to 24 hours that this market may end up being in this area before truly rejecting. Okay. So there we go when it comes down to that position. I am looking at being able to sell it, but I'm not selling it right now because I'm not going to chase it. I'll allow it to be able to push back up. Once it pushes back up, it may end up getting right back inside this blue area a little bit, but once it rejects below 1940, I'll be interested in being able to sell once again. But also, you got to keep in mind that this market just hit a 2 hour D extension as well. So when that happens, it'll be the start of a new move to the downside and being able to go from there. All right. So hope everybody's good with that. But that is pretty much it with gold. No move off of that one as well. If you ended up taking the trade yesterday, great move. Did not take the trade off of gold. Gold wasn't one of the ones that I was interested in yesterday. US 30 and Nas 100 for those movements. So getting off of that, take a look at US 30. US 30, we were looking for a potential buy if it broke a counter trend line break. And then after that, I said that if it did fall, then we were looking at 33,910 as an area where it could be able to find support. I'm going to go back and explain why I said those things yesterday, and we'll see how that kind of reacts to what's happening. But um, from a daily perspective, we can clearly see that one, we're still inside of a larger scale consolidation where the resistance is at 34,400 and the support is at 32,600. From an Ikimoku cloud standpoint, we still are considered to be bullish, but we are retracing back to the VWAP and retracing back toward the overall cloud. So I do expect that we probably might fall for a couple of days because we have had about 6 consecutive bullish days before being able to see this movement happen overall when it comes down to that space. So I am going to end up paying attention to it a little bit more. But currently, right now, I don't think there's going to be a quality position to be able to jump into just looking up the daily chart alone. Okay, so remember when you do top-down analysis, you're looking at it from a weekly perspective, a daily perspective to see if you have time frame alignment. Time frame alignment means that when the daily and the weekly are trading in the same direction, if they are trading in the same direction, then after that you have a trade to be able to take. If you do that and you stay with that model over time, um, if you do that and you stay with that model over time, I guarantee you'll end up keeping yourself out of bad trades. Hey, can you do technical analysis on Bitcoin? We literally just did it, but I'll go back to it. I'll go right back to it. Um, but finishing up on this real quick before we go back to Bitcoin and being able to explain that answer. Um, so we ended up taking a buy trade. We ended up taking a buy trade a couple of days ago, right when the market ended up breaking this counter trend line break to the upside. The total resistance on this one's at 34,400. We've seen that 34,400 be hit multiple times in this overall area back in December of 2022. Um, but currently, right now, the market ended up making a rejection. It had a channel that it was actually going through. Then after that, fell and broke down to the downside. Now, the reason why I felt like it was going to go down to 33,900 was because that's the last high volume node that the market was at when it came down to this push. If you notice right here, that's the last high volume node. However, if it does break below this overall area, that does gives us a couple of scalping opportunities. We have from 32,900 all the way down to 33,800 as a 100-point move that I think that could initially happen that will give us a chance to be able to make some money off of it based off of this movement. So what I am looking for is this. The hourly is starting to show signs of being able to fall, which is good. The 15-minute, I would like to be able to see that there's some type of counter trend line break that's starting to happen. But if you look at it, and if y'all notice it, tell me what you see. Let me see. Let's see. Let me see if y'all see the same thing that I'm seeing. No, I don't like that. It will have to be down here. It's not the greatest wedge that you'll end up looking at, but I am seeing that it's starting to confine within overall spots. If it does break below that triangle, then I would be interested in being able to take a look at that for it being able to sell. Obviously, if you take a look at it from a 15-minute perspective, you can see once again high volume node. Once it breaks below this overall number, all it has to do is break below 33,885. 33,885 would be a great area to be able to get in for us being able to sell if this market holds below that area. And then after that, remember we're going out to 33,800, which will end up being the next spot to be able to get into for it to take profit, in which you would see right there. Um, so essentially my trade will be from this high volume node to the start of the beginning of that high volume node and being able to take that profit in between. That's the quickest and easiest scalping opportunity that I think that would happen if this market continues to fall to the downside. Now, if it pushes up to the upside, now keep this in mind: if it pushes up to the upside, that means that the United States dollar keeps on falling, or United States dollar keeps on getting stronger. I just don't think that that's going to happen. Not today. Um, I think that the better move would be to the downside. So 33,885, I will look at being able to sell it all the way down to 33,800. It'd be an 85-point move. Stop loss will have to be above the high volume node, 33,972, uh, and be able to take a movement off of that. Risk reward factor will be more like a 1-to-1. That'll make me a little bit hesitant to be able to make this move if I'm going to end up taking that chance. It'll be something like that. I'm going to be a little bit more patient, but that would be the move that I'll be looking at being able to take on US 30. Now, that can happen within the next hour. That can happen within the next 2 hours. Obviously, the market opens up at 9:30, so we have to take a look at that a little bit later on. But I'm going to come back to that one and go from there. While we're here, I'm going to go back to Bitcoin real quick. We did talk about that a little bit earlier. I'm going to be very quick on Bitcoin as we take a look at it. Essentially, what ended up happening was that from the fallout of the news, market was in consolidation, broke below 26,000, 26,500, fell back to the previous support level of a consolidation that we ended up having at 25,000, which is right here currently at this particular point. I talked about two different positions where this market could potentially fall down to. The first one would end up being the first one ended up being 25,000, turning past resistance into a future support. Let me see if I can zoom out just a little bit more. There we go. Turning past resistance into a future support. So basically something to the equivalent of this here down. It could potentially do something like this and then push back up. I don't think that we're ready to be able to see this move start to push back up yet. So I think it will fall. If it falls back inside of support, or if it breaks this support, it will fall down to another support. The next support is the halfway point of this move. The halfway point of this move is right around 21,500. So that blue area that I end up having right here, I think that if it does fall, the next area where people would look at being able to buy will end up being at 21,500. Obviously, if it breaks below that, then you're talking about 18,000. I just don't see that happening. There's no news on Cointelegraph or anything else like that that will make the market fall that low at this particular point. But I'm going to sit on my hands and wait for the next move. But I think if it doesn't push up at 25,000, then I think that it will fall down to 21.5. 21.5 will get you way more value for us being able to do it. I'm looking at it from a buyer's perspective, not a seller's perspective. Hopefully that answered your question. Okay. Let's go on to Nas real quick. All right, take a look at Nas. Once again, from a daily perspective, we can see that the market is clearly bullish. It's been bullish for a while. It's really been bullish since March 15th. Once again, FOMC. Greece for Amsterdam. Nice. Nice. Um, as this market keeps on making this move and it is pushing up to the upside, it has broken past two high volume node points and it's starting to break past the third one. I think that the market has to retrace first before ultimately being able to break this spot. If it does push and can remain to stay above 19,000, I'm sorry, above 14,950, then we can see that this market could go back to the overall highs that it ended up having at 16.5 at some point in time. So essentially, we just want to see this market continue to make its wave. It has not had a proper retracement yet. I think that there will be a proper retracement, but remember, if a retracement happens on NAS, and that means that the United States dollar has to get stronger. Remember, United States dollar goes up, NAS goes down. United States dollar gets weaker, NAS goes up. And US 30 goes up. So we want to see how that kind of affects everything. Kind of really going to be based off of what's happening with the United States dollar index as a whole before being able to make a move. But daily perspective, market is bullish. It's clearly to be able to see that. Now, from there, if we take a look at it from a 1 hour perspective, we had a trade that we were looking at a little bit earlier. 70% of that overall move. If you have not took profit off of this one, I would say look at starting to take partial profit, if not full profit, and then after that, wait for another retracement to be able to jump inside of this movement. There's really nothing to be able to do at this particular point right now that would make sense on being able to stay in unless you're trying to add on to a trade and just be in it from a long-term perspective. I think that going into today's news, it's going to be very important to see how the market kind of moves based off of what happened off of FOMC from the next morning. But I'm not going to be interested in having my capital be affected by trying to understand and trying to wonder what's going to happen. I look at take profit now, or I take partial profit off now, and then after that, kind of play it from there. So currently, right now, there's really no move to be able to take the dollar. I mean, the hourly is in a buy zone, which is great, but I just don't think that there's going to be a move yet. I think the market has to fall a little bit. And if it does fall below 14,815, then it could fall all the way down to 14,620, which will basically turn past resistance into another future support before starting to push back up again. Okay. So there we go with that. But that is pretty much it. That's pretty much it. We done went through the pairs that we typically end up going through. If you'd like to be able to learn a little bit more, you'd like to be able to go over some more pairs or be able to learn a little bit how I end up trading from a day-to-day perspective, you can be able to send me a message inside of the chat, ask questions, be able to go from there. Obviously, if you're on YouTube, you'll end up seeing some videos to give educational information about how I end up using the Vortex strategy. Been using this strategy for the last 3 years, and it's been my most profitable manual strategy that you can be able to do for being able to get in, especially over the summertime, because remember, we're going to see consolidation break. It's been like that for the last 3 summers. I don't expect that it's going to end up changing anytime soon. Like always, if you like what I end up doing, please make sure that you end up clicking on that boost button. It also ends up helping us out for being able to be noticed. And like always, make sure that you end up planning your trade. Trade your plan. I'll see each and every one of y'all in the next video. Take it easy.